Hello everyone, welcome back to yet another session on the Merit Shine channel, and today is going to be an interesting start that we are going to commence. And this is basically talking about a interesting set of sessions that we're going to start from today, which are known as the banking awareness sessions. And who are these sessions meant for? These sessions are essentially meant for anyone who's basically looking to build a rewarding career in banking and finance, right? So that is the thought process with which these sessions have actually come through. And we've always had our students coming out and reaching out to us that, sir, we're reading the newspaper, we're trying to follow the news that is happening in banking and finance. But many a times we find that there are so many terms that we do not understand, so many jargons that are there that समझ में नहीं आता है सर कि कैसे इसको proceed करें. Right, so obviously, being someone from the field of finance myself, who basically did not have any clue of finance when I started my career in finance, so I understand what you guys are going through, right? So it's difficult to read a lot of these financial newspapers and not being able to understand what exactly those terms mean. So what we thought was, let's try and do something for you guys from the context of helping you understand financial news and what is the basic level of knowledge required for that, right? And one thing which I tell you today is that जो भी हम sessions में बात करेंगे, whatever we will talk in these sessions, it will be pure play from a layman's perspective. इसमें बहुत ज़्यादा हम high level नहीं जाएंगे. The idea is very simple. We're going to try and understand things from how they work from a common man's perspective, right? So इसमें बहुत ज़्यादा हम terms discuss करेंगे, but हम वो जो terms discuss करेंगे, we will not use too much of finance or too much of banking in that, but we'll try and understand those terms purely from a commonsensical standpoint, right? That will be the objective of these sessions. So while we are creating these set of videos, there is no particular order in which these videos have been created. What we'll try and do, of course, is that try and make these videos in isolation so that each video is in itself a good enough learning material for you, and you don't have to watch a previous video to be able to understand this video properly, right? But obviously, the recommendation would be that if you watch it in a particular order, then obviously the understanding would be even better. That is the thought process, right? So that is what we'll try and do through these sessions, wherein we'll talk from a pure layman's perspective in terms of various terms and jargons that appear in financial news and banking news on a day-to-day perspective, and try to decode those terms in very simple language. So I'm super excited to start this series for you guys. I hope you are too. And without further ado, let's jump right in with today's session. Right, so what are we going to address in today's session essentially, right? So you would have already heard that a lot of things have happened during the economic survey and the union budget as well. So, but before we get into all of those elements, it's important to understand what exactly are the kind of policies that influence a particular country, right? And what are the major entities that can actually formulate these policies, right? So of course, one obviously is the government. And second is obviously the regulatory bodies that are there in the country. More importantly, the biggest regulatory body that I'm concerned about is the central bank of that particular country, right? Now, obviously, any country would obviously have its own government and its own central bank, right? It's a no-brainer actually. But when I look at it, I'm basically talking about the policies that are being formulated by both these entities, right? So obviously there will be certain policies that will be formulated by our government, and there will be certain policies that will be formulated by the central bank, right? So the ones which are formulated by the government and which basically looks at improving the infrastructure of the country, leading to the overall development of various facets, be it your growth of the economy, be it your employment within the various industries, infrastructure creation, and a lot of the social sector reforms that basically we talk about in the context of, let's say, alleviating poverty, financial inclusion, all of those bigger elements which require some kind of a money coming in to the government, which will be in the form of taxation and some kind of spending that needs to be happening in various kinds of schemes and initiatives that the government decides to take. So whatever policies that I formulate from the perspective of taxation, spending, all of these which lead to the overall growth of the country in various aspects, it refers to as the fiscal policy. And you would have heard this term quite a lot of times, right? You would have heard the term fiscal deficit, you would have heard the term fiscal year, right? So genesis kahan se hai? It is coming from this fiscal policy, right? The government policies which essentially lead to the growth of the country as a whole through various kinds of initiatives. So that essentially refers to the fiscal side of things, right? So again, when I say a fiscal deficit is there, right? So when I say fiscal deficit, it basically refers to the fact that there is some kind of a expenditure that is being incurred by the government or the country towards the growth of various facilities, right? So any scheme that the government is launching, some money is actually going into that, right? Any subsidy that the government is offering, let's say we talk about the LPG subsidy, some amount of money is being spent on that, and the government is also getting money in the form of, let's say, revenue collections in the form of taxes, be it your GST, goods and services taxes, or be it the direct taxes that they're charging from citizens like you and me, right? So all of those things are the revenues, and there are some expenses as well. So when I say fiscal, it basically talks about the estimation of the entire period, and this is from an Indian context considered from the April of the previous year to the March of a current year, right? So that is the fiscal period that is being taken into account, and in this fiscal period you try to look at what are the overall expenses that are going to be incurred by the government for various kinds of developmental initiatives, and what are going to be the revenues that are going to come in. And why is it called a deficit? When the expenses are more than the income, then obviously it will lead to a deficit, right? And that is where the term fiscal deficit basically comes into the picture, right? Now the first thing that you have to understand is this is fiscal policy. Now the second thing that comes into the picture is the monetary policy, which is basically the one which is formulated by the central bank. Now the question that comes is, how is monetary policy different from the fiscal policy? So fiscal policy talks about infrastructure, talks about growth overall, right? But it does not necessarily talk about directly impacting the money supply. But when I talk about monetary policy, these are initiatives taken by a central bank of a country which will lead to an increase or decrease in the money supply that is there in an economy. Now obviously any economy will have multiple players, obviously individuals like you and me, common man, right? You also have your banks, you have other kinds of financial institutions, be it your microfinance lending institutions, which basically look at the small lending, right? And you look at your non-banking financial companies also, and there are various kinds of banks. Now you talk about small finance banks, payments banks, so many banks are there now, right? And of course there are various investors that are there in the market, and you also have so many corporations which are obviously creating infrastructure, providing jobs as well. So all these are basically part of the economy, right? Now the point is that when I say money supply is getting controlled, either you're injecting more money into the system. So when I say money को अंदर लाने का मतलब होता है कि liquidity बढ़ाना. And when I say liquidity, what does it mean? If I say that there is more liquidity in the market, इसका मतलब है कि there is more money supply in the market. And when I say there is less liquidity in the market or the economy, it means that there is less money in the market. So we'll talk about the elements of high or low money supply in just a bit. But what I want to talk about is what all are the things that a monetary policy can essentially look at. So this is the first element. So essentially you're controlling the money supply. The second thing that you're trying to control is the amount of credit in the economy. So when I say credit essentially refers to what? You're lending someone something, right? So essentially हम accounting terms में बात नहीं कर रहे हैं यहाँ पे. Pure play अगर हम बोलते हैं कि credit दे रहे हैं, किसी को उधार दे रहे हैं. So what does that mean? You're lending someone something, right? And of course, when will this situation arise? When someone has surplus money, ज़्यादा पैसा है, and someone has less money, कम पैसा है. So the one which has surplus money will lend to someone who has less money. That is the context, right? That is basically the basic fundamental here. So the thought process is supply and give it to the people who need the demand or who have the demand. That's the thought process. Now the question that comes in is, how do I control this credit that is flowing in the system, right? So essentially, if you talk about the formal way of doing things, supply किसके पास है? Banks के पास. Banks have the money. Who needs the money? It could be, let's say, a small farmer as well. It could be a corporation which needs money. It could be individuals like you and me who need money for a housing loan, whatever it is, or a car loan, whatever it is. So it is in the formal sector, the banks or the non-banking financial institutions or various kinds of other financial institutions are providing the supply of the credit to the persons who are needing this credit. But the question that comes in is that how do I control this credit? And that is where the interest rates come into the picture, right? So if the interest rates levels are higher, then what happens? If the interest rate levels are lower, then what happens to the credit in the economy? So all of that is basically being controlled by the central bank. So it controls the money supply and it controls the credit that is flowing in the system, which automatically has an impact on the overall economy itself, right? Those are the fundamental things that I want you to understand from what is a fiscal policy and what is a monetary policy, right? Let's now move forward quickly to understand some very critical aspects of what happens when money supply is too much or too less. So let's look at the too less scenario, right? So let's say, for example, when the required money supply for the economy is not available in the market. जितना पैसा चाहिए अगर उतना नहीं है मार्केट में, what will happen? obviously it will lead to decline in the investments in the economy because there is not enough money which has to be plowed into the economy. उतना पैसा डाल नहीं रहे हैं economy में, so automatically investments that are happening into the economy in terms of various kinds of infrastructure creation, which will in turn lead to job creation, all that is not happening. On the other hand, when I say that there is more than what is required money supply in the economy, then what happens, right? So in that case, obviously the prices will start to increase. Now, obviously, this is related to inflation and we'll address inflation in one of the later sessions. But the thought to understand here is when basically there is too much of money supply, then what happens? Or whenever there is too much supply of something, जिसका demand उतना नहीं है, तो उसका क्या होता है? What happens? उसकी value कम हो जाती है, right? So, for example, when I talk about something that you were able to purchase for rupees 100 last year, right? And if there is too much of money supply in the market today, right? In 1 year, there is a possibility that the price of the same thing which you purchased last year for 100 can actually go up to 120, 125 also. And especially in that context, who is the one who's suffering the most? The poor will suffer the most, because what is happening in this case, if the money supply is too much, the prices of the essential commodities is going up. दाम बढ़ रहे हैं, but poor do not have enough income to be able to sustain themselves so that they can overcome this increase in the value of the primary essential goods, right? So this is in a very layman's term in terms of what happens if the money supply is either too much or too less, right? Now, if you get a little deeper into this, what are the kind of action models that the Reserve Bank of India prescribes, right? There are two sets of actions that the RBI can essentially take, right? So the first one is, of course, talking about actions that can be taken from a quantitative standpoint, right? Which means कुछ आप changes कर रहे हो, percentage of interest rate change कर रहे हो, या कुछ other variations आप लेके आ रहे हो जिसकी वजह से money supply या interest rate पे impact होगा. That is one way. That is the quantitative methods which can lead to a direct impact on the interest rates, or it can obviously impact the money supply itself. And the other way that the RBI can actually influence the monetary policy is through qualitative actions that it decides to take, wherein it's not necessarily controlling anything on the interest rates perspective or anything, but it is doing certain things which is indirectly having an impact on the money supply and the overall level of, let's say, credit in the economy. So these are the two primary measures that the RBI can essentially take, which is qualitative and the quantitative measures, right? Now before we close today's session, I want to quickly show you as to what are the measures that the RBI can take, both from a qualitative as well as a quantitative standpoint. And of course, we can get into the discussion of these individual measures in the subsequent sessions, right? So when I say RBI's action methods, what exactly can it do from a quantitative standpoint, right? It can obviously have a change in the bank rate. It can have a change in the CRR, which is the cash reserve ratio. It can have a change in the SLR, which is statutory liquidity ratio. Then there could be a change in the base rate that is there. Then there could be any kind of a governing principle from a liquidity standpoint. हमने liquidity की क्या बात की थी कि what is the amount of money supply in the market, right? If there is too much money supply, I will say there is more liquidity. If there is very little money supply, then I will say that there is less liquidity. And what is RBI's predominant tool to control liquidity? It's called LAF, which is the Liquidity Adjustment Facility. And इसमें there are various things like repo, reverse repo. Then recently the RBI has also come up with things like the long-term repo operations and your variable repo rate and variable reverse repo rate operations. So those things have come up quite recently. Then you have your open market operations, wherein the RBI started something called as the Government Securities Acquisition Program, right? Then you have your marginal standing facility and your market stabilization scheme, right? Then you have switching of securities. Then you had something RBI which came up recently last year in the context of Operation Twist. That's also something that RBI can do. These are some of the quantitative measures that the RBI can take in order to control the money supply and control the interest rates in the economy. Right. The next thing that the RBI can do from a qualitative standpoint is basically look at, let's say, things like credit rationing. Ration का मतलब क्या होता है? Certain amount of quantity is given to people. So how do I control the credit in the economy, right? That is what is credit rationing, right? How do I control or regulate the consumer credits in terms of regulations? Can I keep some additional margins जिससे कि जितना portion हम lend कर रहे हैं उतना limit हो सके, right? So that is what is basically known as your margin requirement changes. And then you're talking about your moral suasion. डायरेक्टली आप कुछ इंपैक्ट नहीं कर रहे हो, बट आप कुछ ऐसा बोल देते हो, इफ यू बेसिकली एज अ सेंट्रल बैंक से सर्टेन थिंग्स विच इज क्रिएटिंग अ प्रेशर ऑन द बैंकिंग सिस्टम टू डू सर्टेन थिंग्स, राइट? यू आर नॉट टेलिंग देम कि यही करना है, या आप उनके ऊपर कुछ कंप्लायंस एंगल नहीं लेके आ रहे हो, बट आप एट द सेम टाइम यू बेसिकली टेलिंग देम दैट दिस इज हाउ इट शुड बी. See, understanding what I'm saying? You're not telling them exactly what is to be done, and you're not saying that you're going to be, let's say, following or creating any regulations around it, but you're saying that, let's say, if I've reduced interest rates, we expect the banks to reduce the interest rates also. So this is basically what? Moral suasion. You're putting moral pressure on the banking system or the banks to basically reduce the rates. आपने कुछ उसके लिए specifically regulations तो कुछ निकाले नहीं. So that is what is your moral suasion, wherein you're putting pressure on the banking system to do certain things based on the guidelines that have been provided by the central bank. So that is basically what is your moral suasion. So these are some of the things that I want to discuss in today's session in the context of what are the qualitative and the quantitative actions that can be taken by a central bank, and more so because we're talking about India, we're talking about the Reserve Bank of India and the kind of actions that it can take. And of course, in the subsequent sessions, we'll also discuss some of these terms that are there given in your screen right now, and you'll be able to understand a bit more about each of these elements, right? So that is where we close today's session, and I look forward to seeing you in the next one with some more interesting concepts and jargons. Until then, this is Ravi signing off. Have a great day and a wonderful week ahead. See you guys.